We are with Aaron from Mind Unbound. Trades with his group live every day. I've always seen Aaron post stuff, whether it's on mindset, always super interested in his thoughts on mindset, um, market structure day after day, over and over again. I love the way, because that's how we do what we do. It's the discipline to do the same thing again and again, even when it gets boring, even when it gets mundane. To do the same thing over and over again is incredibly important. How are you doing today, Aaron?
I'm doing good, man. How about yourself, Jason?
Good, man. It's cool to do this. I had an interview recently, and it was all about mindset. And we it wasn't even a person who generally talks about it. And I was like, man, I'd love to have Aaron on and just kind of dissect how trading works. And so first off, how did you start to? Because I think for me, I had moments where I started to understand that this game wasn't a game of picking winners and doing it that way. It was more of a game of me fighting myself every day. And so, when did you kind of come to that aha moment when you were like, okay, this isn't just picking winners all the time. This is about handling myself and my own strategy.
I would say, um, so it's kind of a long story. What got me into the mental game? I think I'll boil it down by saying I got sober in 2009, and so you know, alcoholic, addict, like general mess, not a ton of self discipline and things like that. I had traded before that when I was younger, even in 2000, I was taking trades and things like that, but it was always, it was very much, I didn't mind the risk at that time. It was I was much younger. And after I got sober, I found that I was incredibly disciplined in many areas of my life. And when trading, even in 2009, 2010, 12, like I didn't have the same discipline in other areas. I had incredible discipline in some areas of my life, but in trading, I didn't. And I wasn't able to control myself, my own impulses, I think fear. Oftentimes, like holding on to winners was a tough one for me. I had no problem really with cutting losers, but it was really always the holding on to the winners that really drove me nuts. I would always cut too early. I would fight trends. It was just a lot of the kind of general mistakes that I think a lot of people make. But what drove me nuts was the discipline side of things. And so I started to apply many of the same principles that helped me get sober, to be honest with you, to my own trading. And working on, I think, general self-knowledge and your own strengths and weaknesses, and kind of dissecting your own behavior while you're doing what you're doing and things like that is incredibly helpful. Obviously that requires a trade journal, trying to understand like how you felt going into a trade, how you feel during the trade, how you feel after the trade. And when you really start to peel back the layers of the onion of yourself and get a better idea of why it is you're doing what you're doing, I think that it's easier to address. I think that for the most part, people, they're not deeply honest with themselves sometimes. If they're going to sit and continue to make the same mistakes over and over, they don't really do the deep work sometimes to figure out why. Like, so for example, with holding on to winners and things like that, a lot of it had to do with growing up poor, being raised kind of to hold on tightly to everything that I had. I wasn't really built with that risk tolerance, upbringing. So I didn't have anyone in my family taking risk or investing or doing any of those types of things. And so I didn't have anyone to really learn from or learn how to manage myself in that regard. So I had to do quite a bit of understanding of myself to then get myself more comfortable in the game that I was playing, which was trading, especially once it got into futures and things like that. It's a little different with stocks and buying stocks. If they go against you a little bit, okay, if it's a good company, I can hang on to it, whatever. It's look at it as an investment or something. But when you're getting into day trading and managing risk on smaller time frames, you really have to be disciplined with what you're doing. And so that's where I started to ratchet up my own understanding of where I was having these shortcomings and things like that. So it all kind of stemmed from, I think the discrepancy I had between discipline in certain areas of my life and the complete lack of discipline I had oftentimes when it came to executing trades and managing risk.
No, I love that, and I've myself been through the program too. Still in it to this day. I think it's incredibly important. The thinking of just the steps and the traditions of the programs and understanding like the ways to kind of work on yourself, so you're more honest with yourself. Because at the end of the day, like the game of trading is a game against yourself. Like I think too many people think of it like, you first start learning how to trade, and I used to always, wonder like, what's the secrets? Like there must be something out there I'm missing because these people are making money and I'm not. And I always thought it was some magical thing that they had. They just could pick winners all the time or something, and it wasn't that. It was just understanding yourself, understanding how you work. Some people are great day traders. Some people are great long-term traders. Like, but you have to figure out how that fits into your personality. And then, going through all the steps, you kind of start to work on yourself, and you're really honest with yourself. Like, you have to do a lot of things to go through the steps that people don't want to do, which is looking at yourself. The bigger part about, like, yes, people know, like normal people even know about the amends process. You go around and you basically, at a certain point in your recovery, you go around and you either apologize to people, pay people back, whatever it is. Think people you've wronged. That's not the hardest part to most people. Most people always say it's the part where they had to get ruthlessly honest about themselves, and that's very early in the step work. So I think that's the first thing that you kind of have to do as a trader. Like, how do you handle this situation of yourself? Like, can you handle drawdowns? Can you handle risk? Why can't you handle risk? And you understanding yourself to that point is a testament to you kind of digging through your life and going like, hey, I grew up like this. Because I grew up like this, I can't do this as well as other people. So why can't I do that? And then when you start to ask the questions why, and you figure out the how and all the other questions inside of that, then you can really start to become who you're meant to be. Because it doesn't come easy and it takes a lot of work. So I think that's also why it takes people so long to really learn how to trade well. It's not something where you're like, you start out on day one, you're a great trader. It takes years. I took many years before I was profitable. Many years, blow ups, all types of problems with trading when I first started. But it was really digging in, learning about yourself, figuring out how you can be your best self, and then trading will come. But it doesn't come through any like magical course or anything than that. You can basically do that. So speaking of which, you also have a mindset course. And so what would you say like to new traders? Like, how would they start to understand themselves in a way that they can kind of figure out their character defects and their flaws as traders?
So I think probably the most common thing when I'm working with someone, especially if I don't work with a lot of new traders, but even some people who've been trading for years, is to understand what time frame is going to be the best for them. Because the path of most traders, as I see it, is they get into trading for one reason or another. Usually they come across either social media or other areas, and they see someone else making money, right? So they see someone else making money and making it look easy at times, and so that person may have a longer time frame, right? Like, so, or even just more of a swing trader. And then if you are not great with holding risk, right? So if you're not great at holding a position for an extended period of time, and you're trying to trade on someone else's time frame, it's going to be very challenging for that to work initially. It takes years, I think, to actually change that type of behavior. So figuring out your time frame, I think, is one of the most important things early. I also see a lot of traders, they strategy hop from one thing to another, and trying to figure out what's going to be, the thing that works for them. And where they generally wind up is with 900 different things on their chart, many of which they don't even use, but some of them which they use. And I find that to be unhelpful, and until they dial in on what really matters to their time frame. So first, I think it's about asking yourself the question, like how do I act when I'm in a trade? Like, can I hold this? Am I fine with holding risk for an extended period of time if it's working in my direction? And am I also fine with cutting losers? And you can kind of figure your time frame based on some of that information, and then finding the strategy that's going to work the best for you. I'm more of an intraday scalper type trader. I'm looking, I trade mostly NQ, sometimes also ES, CL, sometimes bonds. But I'm in a trade anywhere from 3 minutes to an hour. So I'm looking for 10 to 20 points with my first take profit in NQ, which sometimes can come in seconds. So that's where I'm comfortable. That's where I know I can manage risk the best. And, I stay on that time frame, but I'm not going to shift into, okay, well, today I'm going to go for, a 900 point swing trade, because I would struggle to do that. So if I do play that, I'm going to do it in a different way. Maybe I'll just buy QQQ or SPY or something like that and just put it in a separate account. But I think understanding your time frame, if you're going to be an active intraday time frame trader or a day trader, is the critical piece, because that's what's going to help you with your risk management. Because the thing is like, it's one thing to say I'm going to enter a trade with a 2-to-1 risk reward, and I'm risking, let's say it's a stock and I'm risking 5% to the downside for a 10% move to the upside on a 2-to-1 trade. Well, can you actually hold that trade for 10%? Are you able to sit there and hold that for 10%? Because if you're not, then your risk reward is maybe 1-to-1, not 2-to-1, as you might think. So I think being honest with your ability to hold risk is kind of the critical factor with determining your time frame. Like, how much can you hold? How far can you hold it? And can you get out if it's not working? You know what I mean? I think are the most important things. Those are the things that I think lose people the most money in the beginning, is not having those probabilities in the right order, or at least matching their time frame. If you can't match the probabilities to your own, I would call it like your trader hygiene, like your own ability to manage risk, it's going to be very difficult to be profitable.
No, I love that, because for me, I'm on the other end of it. I'm a long-term swing trader, and people always ask me the same type of questions. It's like, I could not day trade. I'm a long-term, like I'm more of a position trader even. My time frame is anywhere from 4 months to a year most of the time in the futures portfolio. So if I'm trading like that, that tells me like I'm good at handling volatility. I'm also good at managing risk. I understand that time frame better. I'm good at, not saying I'm better than other people in that do other time frames. I'm saying that I'm personally good at handling risk in that time frame. You are personally good at handling risk in that daily time frame. I couldn't do it. I've tried it before. I think a lot of people as traders usually start out on the short end trying to trade that way and find out that it's difficult for a lot of people. And then you go to the longer end, you understand it's difficult too. But you just got to figure out where you fit in. I know some people are very profitable day trading. Some people are very profitable swing trading, position trading. I always say on here all the time, like, there is no right way to trade. There is no right way to do it. There's no perfect time frame. I met a systematic trader who trades trends following strategies and their breakout systems, and he trades in a 5-day time frame, and he holds nothing over the weekends. I've never even heard of that, but he's profitable. His returns are good. So once again, it's like there's so many different ways to trade. You have to really figure out what fits your mindset, what fits your time frame, what fits your strategy, what fits your lifestyle more than anything. And so, for you in that daily time frame, did you find that to be a good strategy because like your life around you kind of fits that well? Like you can kind of manage the rest of your life easier by kind of putting on this trade, being done with it by the end of the day?
Yeah, so I would say that most of the time I'm almost always flat at the close, except for, investments or something like that. I mean, when it comes to futures, I should say, like, I'm flat at the end of the day. I might take an options trade here and there that I plan to hold for a week or something, but that's in a separate account. And so when it comes to my lifestyle, like, I would not sleep well holding a position in futures overnight. I'd be constantly looking. I'd be constantly wanting to watch what's happening in the futures market if I'm in an active position there. So for me, it works better emotionally, mentally. And when I come into the day, so a big part of this also, I think, initially for newer traders, they come in and they see, like, so there's, you go around on Twitter or Reddit or wherever, you're going to see people with lofty price targets making big calls about where we're headed, that the market's going up or it's going down, and they're very definitive in that statement. And nobody knows, right? So that's, yes, there may be some, okay, it's probably going to go up, or probably going to go down, or if we break from balance, like, okay, maybe sellers are in control a little bit here or something like that. But I don't know ever where the market's going. All that I know is where I can manage risk from, right? It wasn't until I really got good about that and really not caring if the market goes up or down that I was able to be really consistent. Because I would always come into the day with some sort of a bias, usually centered around my positions or positions that I was wanting to take, that it's going higher or it's going lower, or it can't go any higher than this, or it can't go any lower than this. And having this very definitive belief that I could predict where the market was going. On a smaller time frame, I think it's a little bit more, I don't want to say predictable, but it can be for me. But I have no idea when I wake up in the morning which way the market's going. The only thing that I try to identify when I write my daily plan is, here's where I think I can manage risk from, right? So below that, I know I'm wrong if I'm looking for a long position, or above that, I know I'm wrong if I'm looking for a short position. And coming into it with that understanding and not really caring if it goes up or down, and only focusing on the areas where I can manage risk from, will keep me out of a lot of trouble and keep me out of ego, keeps me away from, I find that when I had that belief that I knew where the market was going, I was much more inclined to hold on to losing trades, that this is going to come back. It has to come back, or whatever, like that. It's just that mentality. And when you kind of let go of the fact that you don't know where the market's going actually, and just get in tune with, okay, I just know where I can manage risk. I don't know anything else. And I might know where I would cut early if it's before my target, because I see something that is important, right? But outside of that, it's really just about keeping it as simple as possible for me. I don't think a lot of people, when they first start trading, understand that nobody knows where the market's going. There's odds, and there's you got the Fed and easing and all these other things, and things that should push the market higher, but none of that means we're going up today, and none of that means we're going down tomorrow. None of the macro stuff has ever helped me, because all it generally did was cement me in some sort of a bias. So I look at it now as just one day at a time, even in the market, one day at a time. And that's why I like to come in flat, because when I come in flat, I don't care if it goes up or down. I just know at what point sellers or buyers might take control from the other side. And that's where I try to trade from, is just that spot.
I think that's incredibly important, because it's that way in every time frame, or anybody who's at least a good price action trader. Like, if you're a good price action trader, you just have to understand that, like, hey, I talk about it all the time, where it's like, hey, I'm just waiting for this to break this level. Hey, like that's all I'm doing every single day. Corn, we were just talking about it earlier. Corn's been in a downtrend, and there hasn't been a turnaround in corn for God knows how long. I haven't had a buy signal in, probably been a year maybe. But, if corn crossed a certain level, yeah, I just get long it, and I wouldn't think twice about it. And I think that's it's incredibly important to just let go of your biases, so you can just put on the trade. Like, I have no idea if corn's going to go up or down. I could short it. I could be long it. We did have a short on it for a while, and now it's got stopped out of its short. Now it possibly could be long, or it could go back to short again. I have no idea. It just doesn't matter. Especially as a futures trader. You trade futures, I trade futures. You go long or short just as easy as the other one. So I think the best thing to do as a trader, and also like if I do have macro analysis, and I talk about this before because I write a lot, my macro analysis isn't exactly based on anything more than, hey, the price action is telling me blank, so therefore this macro analysis is exactly what I'm thinking now, and that's about it. Because at the end of the day, if you're constantly stuck in like this has to happen, or like I believe this, and this is why I think price action trading is probably the best type of trading, because you can let go of your biases and you can just look at the price. I mean, take out like a good exercise that people used to do for me back in the day, which was like, here's a chart, no name on it. What would you do? People do that stuff. Like, I also think, so many people get stuck in the stock trading world. And like, I really think the futures world is much better, or even the ETF world. And the reason why I say that is so you don't get too stuck in like, this has to happen or this has to happen. Because I like Apple. I have a cool Apple phone, so therefore the Apple stock has to go up. None of that will matter to you anymore. The only thing you'll really care about is making money, which is really like that's what we're here for. The price action is how we get paid. And so if you're not watching the price action, you're not paying attention to this, like you're not going to get paid. And that's the whole goal of this. And also the other thing, like when you look out in the real world, and you and I probably have friends right now who are struggling, and there's a lot of people struggling in the world. However, the market is a very different thing, so you can't get stuck. I see so many people get stuck in this. Hey, the last year, 2023, great example. The Nasdaq continues higher. I remember when I got the Nasdaq signal in my portfolio to go long the Nasdaq. I remember looking at it and going, "No fucking way!" Like that's the first thing I thought. There's no fucking way. This is impossible. I can't believe it right now. But once again, it's like I shut up. I take the signals. I understand the market is forward looking, even though that doesn't even matter to me. I just understand that the price action is telling me something. I've ran my back test. I should just take the signal. You get long the Nasdaq, and it ends up going up all year long, even though the economic environment, if you want to say that, didn't look good. So it's like you have to always watch and respect the price action over everything else. I watch so many people get killed because of that. And that wraps into our next thing, which I was going to bring up too, which is you brought up earlier, holding on to winners. Holding on to winners is incredibly hard, whatever time frame you're in. Like you said, you could be in a trade for a couple minutes or an hour. Once again, it's how do you hang on to that winner? It doesn't matter the time frame. My time frame's longer, your time frame's shorter, but you still have to be able to hang on to those winners during certain times. So why do you think so many traders have so much trouble hanging on to winners? Like we were talking about earlier with the fundamentals. I see so many people who are just brilliant people when it comes to fundamentals. They know things that I have no idea about. I could talk to them, about things, and I'm completely, out of the loop for what they know. However, if they put a great fundamental thesis together in a week, they're usually out of it because the fundamentals will change. At least that's what they'll say, and they'll be out of that trade because of it. Whereas if you're just watching the price action, sometimes you're still hanging on to those moves. So, what do you think? Why do you think traders have so much trouble hanging on to winners?
It's, I guess, depending on strategies, right? So if it's a fundamental thing, I mean, for me, one of the bigger issues, like let's put aside what I said earlier because we covered that piece, which is just an emotional roller coaster with holding risk. If you're not in tune with holding risk, or if you weren't raised that way, like literally most people who grew up without a lot or grew up with parents that held on very tightly to everything, and it's not natural to hold risk. And when you're in profit, it feels natural for you to close it. Like you want to shut it and take that money and hold on to it, right? So, but putting that aside for strategy purposes, so I have to look at both ends, right? Because there's the strategy side and then there's the emotional side. On the flip side, I find that one of the main factors that leads to even more emotional closing of trades early is the lack of an exit strategy, right? So everyone spends a ton of time on their entrance strategy with scalping or whatever, even technical analysis traders, you get a holy grail set up off the 20-day moving average for a swing trade. And, you have different setups that you're looking for, order flow reversals. If you're trading futures on a small time frame or whatever it might be that you're looking at. And you have these good ideas and setups to get long or short. But you don't have a set in stone exit strategy a lot of times for that, right? So you might have general targets. Let's say you set a bracket with like a 10 point, 20 point, 30 point take profits, right? And so you just enter and there's your take profits. But do those take profits even make sense, right? Like did you just get in at where your take profit should be 200 points and you're just going to exit it early? Or, so I think that strategically speaking, most people that when I confront, like my members and I talk to them about this issue, most of the time when I say, what's your exit strategy? Can you explain to me what would get you out of a trade? They don't have that. Like, they don't always have a very, defined answer. They almost always have set targets with a bracket order or something like that. But for me, I think there's a number of different elements to this. And the reason why it matters is because if you don't have an exit strategy, the only decision-making tool you have for exiting a winning trade is how much emotional stress you can handle, right? Like, so at some point it's going to go up enough for it to stress you out enough that you're just going to flatten the trade. You're going to get out of it because it's like, what if it comes all the way back? Now the fear starts to creep in. Like, I've made money on this. Like, what if it comes all the way back? But, I find that defining your exit strategy with understanding targets, understanding the rotations of the market, maybe where this might go. If it's a intraday time frame trade, if you're buying at the value area low on a market profile or volume profile, and you're targeting 10 points, but the value area high is like 40 points away. Like, maybe you're just leaving a lot of meat on the bone. Maybe you're just getting out too quick. There's a lot of different ways to look at it. But for me, it's, I generally take profits. Essentially, it's a reverse engineering of my entrance strategy, right? So, and a lot of that's the easiest way to put it, right? So if I'm looking for certain things in order flow to happen for me to get into a trade, I should be looking for almost like a short setup to start taking profits on that trade. Like, if I see that we're running into one of my areas of resistance and I start to see buyers get trapped and then sellers start to step in, it might be wise for me to take some off, even if it's before my first target, right? But adding a systematic kind of approach to it and having some sort of a strategy that you can lean on, something you can put on paper and say, this is what it is. It takes away a lot of the reliance on emotions for decision-making, because it's all about decision-making and what's going to spur you into a decision, right? So do you want your emotions to lead the decision, or do you want to have a strategy? You still might make emotional mistakes, but over time, you're going to get better if you have a stated kind of idea of what your exit strategy is. So I usually have people put it like, just give me 4 bullet points, like just 4 simple bullet points of what might get you to take profits on a trade or flatten a trade. Then when you're in a trade and it's moving in your direction, none of those things are happening. It's much more likely that you're going to not have those emotions, because without them, every little pullback looks like, oh shit, I should flatten this trade. You know what I mean? Because you don't want to get stopped at break even, right? So,
yeah. No, I love that, and it's something that I talk about. You nailed it perfectly, because I talk about that same thing all the time, which is an exit strategy. And I like the way you put it too, because I've never really put it that way, which is basically reverse engineering your entry. Trend traders, let's put a simple like turtle strategy. You have a 100-day high and you get off at a 50-day low. Very simple way of looking at that. In a long-term trend strategy. But yeah, it's the exit strategy is the most important thing that you'll ever learn as a trader. And even fundamentally, like, I think why it happens fundamentally so much is because so many things can shift when you're a fundamental trader and you're not looking at the price action. like you're watching the news and something new comes up. But I think still, even the good fundamental traders that I've met, they are still using some sort of exit that is either technical. I've seen really good fundamental traders use technical exits, trailing stop loss, 50-day low, moving average crossover, something, or they have a fundamental reason for getting out. And that's the reason before they get in. I think the most important thing on both ends, whether you're fundamental, like I'm price action based, Aaron's also price action based, but I'm saying even if you're fundamental based, you better have your reasons written out before you get into a trade. That is like what you have to pull from. If you pull one thing from this conversation, I think what Aaron said is good. Write down 4 bullet points, because you really need to understand why would you get out. I have 2 reasons for getting out of a trade for me. It's either going to be one price action based signal or my trailing stop loss. That's it. There's nothing else. And I always make the joke that Coco, for example, this has been a stupid trade. I'll never see a trade like this ever again. But I know that God could come down and tell me, Jason, Coco's going to crash tomorrow. I'm glad you made your profits and all, but you should probably get out of it. And I would be like, damn, God, I'm sorry, but I haven't got my exit signal yet, and that would be the truth. And I think that's what you build up over time as a trader, is like that conviction in your strategy. And I'm also understand, I'm comfortable with my strategy. I understand that I'm never going to hit a perfect top. I'm never going to get out perfectly at the bottom. I'm going to, let's say, year to date, it's something like 170% or something stupid at this point. But let's say I know I'm not going to get out at 170%. I know most likely I'm going to get out at 150 or something, because my trailing stop's got to be that wide to be in that trade. I understand those things. I think where you get in trouble as a trader is when you try to hit those perfect tops, hit those perfect bottoms, nail everything perfectly. And yes, there's certain strategies where you try to hit those, sure. But once again, you have to understand that you're not going to get all those right all the time. You're going to have to get out sometimes. You're going to miss things. I can't tell you how many times, lately, especially more than anything else, I've seen more and more traders talk about missing things. Oh, I can't believe I missed that trade. I didn't put it on. It's there's always another trade tomorrow, So I think it's and what you said is incredibly important, because I think if everybody can just gather one thing out of that, write down your exit strategy, put it on your damn wall in front of you, and just go off of that forever, and you will be a phenomenal trader. Because I think even if you do simple back tests, and Tom Basso did this, and I've actually done a version of this too. So you do a coin flip, and you buy or sell, let's say, the E-minis. And basically, if you use a good exit strategy, good risk management, good position sizing, and so on, you actually find out that you will make money just through a coin flip strategy. So that tells you more than anything else. And also, if you look at let's say I did a system one time that I posted, which was just buying over a 10-day EMA. You buy over a 10-day EMA, and then you use good risk management, a good exit, and so on. And you find out that your win rate drops a ton. However, you still make money. And it's because your exits are kind of giving you a way out with keeping some profits. This is the exit strategy is really everything. And I don't think it's talked about enough, because once again, people want to hear what to buy every day. You and I would be much more popular if we just posted stuff every day. We're buying this and buy this and buy this stock, pick them out of a hat and just throw it at a wall. But that's not real trading. That's not how you make money. And so I think it's good that people like you are out there that just teach people how to actually do this, instead of what's hot, what's popular. Like you said earlier, Twitter's full of people talking about all this stuff and all the money they're making, and it's half of it's not even true. And anybody who's a real trader will tell you half of it's BS.
Yeah, I never post trades on Twitter, and even in my group, I trade live with them. I call out my trades live, but I beg them not to take a trade just because I took a trade. I do it so that they understand where I'm doing something. But I tried to get people to learn. I feel like anyone who's copy trading someone else is doing themselves a disservice, because you're becoming dependent on someone else. and you're not going to put in the actual work that's necessary to understand risk management, to understand why did I take this trade. So my goal, at least with my group, is that they know where I'm looking to enter before price even gets there. And I tell them on the way and stuff like that, and I write a detailed plan of what I'm thinking. But the idea is really that you should have a thesis for every trade you take. And if you just see, I mean, because there's a lot of very smart people on Twitter, man. I mean, there's some great traders on there. There's some very brilliant macro people on there. But they're wrong a lot too, you know, and they'll be the first to admit it. But the thing is, the difference is that they know how to manage risk, like especially the really good ones. Like they know what they're doing. They know how to manage risk. And even if they're wrong, they're probably an account in some other trade that is doing fine. So for the individual, it's about understanding the price action, how the market moves, a thesis for what it is you're doing. Like for me, I'm big on context, you know, like what's the context, what's the story that the market is telling me every day, right? Like, so every day I detail and write out, I mean, basically 2 full pages on ES and NQ on what yesterday's price action meant, where we're at in the larger time frame. Are we in balance? Are we trending? Are we breaking from balance? If we do break from balance, where would that happen? And really just trying to identify the edges of the market where we can potentially make money, and what is the fairest price and what's the advantageous price, right? So I want to trade where the advantageous price is. I don't want to trade at the fairest price, which for any of the volume profile people is, you know, the high volume areas, where all the volume is sitting. Like, I don't want to be executing trades in there. I want to target that maybe, but I don't really want to be swimming around where everyone else is swimming. I want to wait for moves away from that area where I can trade it back to that area. So, you know, I think when you really dig in and start to understand at least the story that the market's putting out there, you start to be able to identify the areas in the market where you can manage risk. For me, that has been market profile, volume profile. I know some great technical analysis traders as well that seem to do well with that. But I have to go, and this comes back to our earlier discussion about strategy. You have to go with whatever that really works with your mind, like that. So for me, order flow and balance and creating my zones and levels off of prior balances and things like that, it really works for me, right? Like, so, but other people, you know, it might not work for them. So the thing is, and then for some people, you know, they might have completely different ideas. They might use options or using gamma and all this other stuff. Like, I have no idea how to use that shit, so I don't mess with it. Like, I mean, I don't know how to manage risk with that, so I don't mess with it, because I've never seen anyone articulate to me a good way to manage risk with it. So it's like, okay, if that works for you, that's great, but I can't think like that. I can't get into a trade where I have no idea where my stop should be, or like what's the risk to the downside, but where am I actually targeting if the gamma thing works out. Like, I just don't know. So I think keeping it simple for me, and my system has become a little more complicated over time as I've gotten comfortable with it. I've added layers to it. But in the beginning, it was really just identifying low volume areas, identifying if we're in balance, and then following value around. Is value moving lower? Is value moving higher? And on all different time frames, the monthly, the weekly, the daily, and the 30-minute. So that's, outside of that, I don't care about anything else. Like, everyone can have their thing that works for them. And I know a lot of people, you know, there's some great traders and old floor traders. They're using, you know, the 30-second opening range, right? So the first 30 seconds, we wiggle, 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 whichever way we go, they're going that way. Sure. If that works for you and you have good targets, you have a clear area where you can manage risk, then that's great. I watch that. I watch the 30-second opening range, but I don't execute off of that unless it's in an area of interest for me where I know I can manage risk. So I think there's a lot of different things that are important, but I think it's also what makes sense to you and what are you going to trust? Because at the end of the day, once you take a trade off a level or whatever it is, or a moving average or a VWAP that you anchored somewhere, once you take that trade, your ability to hold that trade, your ability to manage risk around that trade is directly proportional to how much you actually trust that strategy that you're using. Because if you're not very confident in what you're doing, I think you're going to struggle with all the emotional stuff. You're going to continue to struggle with it. To me, it's a balance. I mean, at one point I thought it was all emotional, and at some point I was like, nah, it's mostly strategy. And now I think it's really just a balance between the two, but that a lot of the emotional can be overcome by really understanding your strategy and identifying your strategy, like writing it out. What am I looking for in this market? How should I approach each day? I think that those are kind of the critical components.
No, that makes perfect sense. I think it's incredibly important to just understand yourself and what strategy is going to fit for you. I think too many people get too stuck in, like, I like what you said earlier, which is, I beg people not to trade like me, and that's the truth. Like, I don't want people, that's not the goal. What we do, and I do the same thing that you do, I want to show them the discipline behind my trading. Like, I want to show them what I do, how I'm disciplined, how I manage my risk, how I have no problem getting out of a trade when it changes trend. Like, those are the things that I'm trying to show people, because at the end of the day, you're not me. You're not going to trade like me. I have a specific construction of my life that I understand these days that turned me into the trader that I am. Me being an addict, me being a professional bike rider, like, I have a high risk tolerance. I can handle volatility maybe better than other people. So this builds me into the trader I am. So you have to really understand those things. And I think it's funny because I'll ask people questions when I talk to them about trading. Hey, what did you do when you were a kid? And they'll think I'm like just a whack job, basically, but it's like that. It's the truth. It's like, because if you don't understand those things about yourself, you're not going to understand what type of trader you need to be, and then also figuring out, like, you can figure out what you're attracted to, like, you are attracted to day trading. I'm attracted to trend following style strategies. And you can figure out those things, but that could be, anything. I could be a daily trend follower. I could be a weekly. Then you got to dice your time frame down. Then you figure out, I like what you said too. I've never thought of it that way, but like figuring out like what makes sense to you, because you got to trust it. Because there's so many people that, I think the people that have the hardest time trading are the very, very smart ones. Like, per se smart, well, school, they went to college and so on. They have so much trouble trading because they think of it in this way that you have to be right all the time, and every strategy they're skeptical of, and really, like, trading is a thing where you're wrong a lot, and your strategy is going to be wrong a lot. And can you figure out a way to be profitable while being wrong a lot? That's really the goal. So as traders, I think all those things are incredibly important. So I hope people are really paying attention there, because it's really like you're giving the game away. Like, that's the way to say it. And I hope people pick that up, because at the end of the day, you seem to do something very similar to what I do. Is because I want to. It's probably a bad business strategy, honestly, to teach people how to do what you do, so then they leave. But that's the truth. Like, at the end of the day, like, I can't lie to people and tell them like the things that I didn't do. What I did learn after all these years is that me trying to trade like somebody else doesn't work. Me trying to be something I'm not doesn't work, and me following somebody else's trading strategies and ideas doesn't work. So I have to build my own. And the people that I follow, that I pay attention to, they're people that either match with my strategy, help me with my mindset, something. And so you can basically put all that together, and now you have your strategy, your few things, like narrow your focus. I'll find so many people have like 90 letters that they will follow, and 90 traders that they're like, oh, I'm going to do exactly what this guy's doing. And, I got to wait for this trade idea that this guy's going to put out. And it's like, you're going to lose money that way every single time. You got to figure out how you do this for yourself and find people that are going to help you to learn that. And that's how you really trade.
Yeah, I mean, if you're lucky, you lose money copying other people's stuff or trying to trade their thing. I find that if you do hit one out of the park based on someone else's ideas, over time, it actually is gonna cost you, because you're not actually sure why you took that trade, or you're not actually understanding the reasoning behind it. It's just going to make you more likely to, like I tell, like with over trading or anger trading and things like that. Like the worst thing that's going to happen is you're going to like make $10,000 one day over trading, because the next time it comes into that and you fall into that mode, that like kind of aggressive fight the market, fight or flight kind of idea in your mind, you're going to blow up, because you're going to think it's okay. I'm going to do the same thing I did last time. I'm going to make $10,000 in one day, and I'm going to get it all back. And that's where people start to habituate bad behaviors, is when they actually make money in that bad behavior once or twice. And I find that that's a very destructive thing. So it's like you almost want to lose money if you're doing things outside of what you know to be right, like anything outside of your strategy. And sometimes it goes the other way, where people are following their strategy, they're doing exactly what they're supposed to be doing, they're disciplined, and they lose money on a trade, and then they give up on their strategy, or they start doing something else. But as well as I do, like even in your best setup, sometimes you're going to lose money. And so getting away from something that's been working for you just because it doesn't work one time or a couple of times in a row is also unhelpful, which is why it's so important to have kind of a dialed in idea of what your strategy is. I push people to write it out, like write down exactly what it is you want to do. You write down exactly how you're going to manage risk around that, because then you have a bulletproof thing that you can come back to. You can adjust it over time if necessary to make sure that it's profitable, to make sure that it's making money. Even if you follow it perfectly, is it actually making you money? But more so, you then also can identify when you're breaking your rules, when you're doing things that you shouldn't be doing. I have all types of behavior rules on myself. If I take 3 stops, I'm done for the day. And so even if I take 6 trades and 3 of them are winners, if I take 3 stops, I'm still done for the day. So sometimes I'll hit my stop limit and I'm green on the day, but I just don't take any more trades, because if I've taken 3 stops, it means one of 2 things: either I'm not seeing the market, or I'm taking too many trades, like whether I'm green or not. Like, so I just set that limit, and then I'm done for the day when that happens, because I know I'm either trading too much or I'm not seeing the market correctly. Right. So I think that we have to set some sort of boundaries and guidelines on our own behavior and allow them to work with our strategy. Also, there's a lot to it. And then there's the discipline side of things, of actually sticking to your rules. But
Yeah.
that's a whole nother can of worms.
Yeah, it's a whole nother interview, really. Like it's really but I also like, one on this one, which I thought was cool, which you mentioned that, sticking to your strategy. I think that's the hardest thing for most traders to do, especially new traders. You start trading, and like, let's say you do follow my strategy, and like right now, yeah, we're killing it. It's been a great year. Markets are trending like crazy. Of course, it's a great year. However, there's been plenty of choppy years. You're not going to like my strategy when it's choppy. You'd like Aaron's strategy a lot more at that point. So once again, it's figuring but I'm never going to go, hey, you know what? Markets are choppy. I'm going to start trading like Aaron. I'm going to follow Aaron into his trades. Like that would be ridiculous of me. I can't trade that way. That's not where my talent lies. So you have to figure out, how do you stick to your conviction? And also, like Aaron said, the other part of it is figuring out the difference. Is the market environment bad for your strategy, or are you not following your own rules? And so if you can figure out those 2 things, and if it goes, okay, well, I'm not following my own rules, then you go, okay, well, I need to follow my rules. And then if it's, hey, the market isn't conducive to my trading at this point, then you continue to trade that system, because the market will change and be conducive at some point. So, you have to kind of figure out those 2 different things. But we'll end it right there, Aaron. Thank you so much for coming on, man. This was a lot of fun. We got to do this again. I could talk to you forever about this.
Absolutely, man. Anytime, brother. Take it easy, Jason.